Hey guys, good afternoon. It's Angelo Christian Financial. Thank you so much for watching another great edition of Real Estate Insider, our podcast, where America goes for funding for the last 20 years. Call or text us at the number above to get financing, or click on the YouTube link below to get signed up to get pre-approved today. Today we're actually talking about how does inflation actually affect mortgage rates. Did you know that actually inflation has a negative relationship to mortgage interest rates? That means that if inflation goes up, interest rates are going to go up. And today we're going to be talking about, and there's a little graph that you can see behind me, and it'll be in the YouTube description. You can kind of download that to take a look and see how that graph works in a circular relationship. So the biggest thing, the chatter for 2021, a lot of economic fears for 2022 is that we're going to be running into inflation. What's inflation? Well, you can imagine what inflation means when something gets inflated, right? Like a balloon, it gets more and more air into the balloon, and the balloon gets bigger and bigger and bigger and bigger. That's kind of like what inflation is. That means that the dollar, our currency, the US dollar, is going down. So our purchasing power is also going down. So it costs more dollars to purchase that cell phone, right? It costs more dollars to buy that loaf of bread. It costs more dollars, to go to the movie theater because everything has gone up. It's been inflated. And you're seeing that right now with lumber prices, commodities. You're seeing that with pretty much everything, food. Everywhere you go, the cost of beef, the cost of chicken, vegetables, everything has gone up, right? Because of this pent-up demand from COVID. So you're seeing this kind of staggered inflation kind of happening. Now, the thing is, how does that affect mortgage rates? What does that have to do? How does inflation have anything to do with mortgage rates? And that's exactly what happens. When inflation goes up, the US dollar, the currency gets weaker, it goes down. So what happens is the demand for our bonds, our US treasuries, also goes down. So investors on Wall Street, they sell off the bonds. We've got to remember that the investment class, the market class, is the one that's driving the prices on bonds, not really so much what the Federal Reserve does. I know there's a big myth about the Federal Reserve controlling interest rates, but really it's about what the investors are doing. And if you have inflation rising, that means the dollar is going down, then there's less demand for our bonds, our US bonds, our treasury bonds, so they sell off those bonds. And remember that the bonds, price of the bond has a negative relationship to the yield. So when the bond prices go down, the yields rise. That means interest rates are rising. So when interest rates rise, right, that means that the mortgage rates are going to go up too because the bond rates are rising. So the 10-year yield is going up, the mortgage interest rates are going up. So when mortgage interest rates goes up, that means there's less consumer demand for housing, right? For commercial loans, for residential loans, because would a consumer rather pay 3% or 4% on their mortgage? Okay? You're gonna have more people come out of the woodwork when interest rates are really, really low like they are right now. You can get a 30-year fixed at 2.9, but if inflation goes higher, that means that your mortgage rates are gonna go higher too. So then you're going to have less people, less spenders, less demand, and then the economy will pull back, right? That's what happens when you have inflation. That's usually when you see inflation that's on the rise and interest rates goes up, that means that the GDP will somewhat contract. And when the GDP contracts, you could experience minor recession-like terms. Now, I'm not saying that we're going into a recession. I don't know how high interest rates are going to go. I don't know where inflation is going to go, but I'm just clearly explaining to you guys out there how inflation affects mortgage rates so you're aware of what's to come. Interest rates are not going to stay this low forever. I promise you that. There'll be a time, and we'll do a show on it, when you'll see the 30-year fixed rate rise again and the 15-year fixed. So if you're thinking about getting a mortgage, now is a great time to look at getting a loan because interest rates are really, really low, right? So would you rather have a 3% or a 4% mortgage, right? On a commercial loan, would you rather have a 4% commercial loan or a 6% commercial loan? So think about that, because if inflation goes up any higher, it will affect the bond market, i.e. it will affect the mortgage market, and your interest rates will be higher. So my advice to you is if you're looking to lock in, now is a great time to think about locking in to get a loan. You can call or text us at the number above, or you can click on the link below to get signed up to get pre-approved. Remember, we're a nationwide commercial and residential lender. We've been doing this for over 20 years and helped hundreds of thousands of people. So please reach out to us. We're here for you to be your best conduit for funding. Think Angelo Christian. Call or text our office. And if you know anyone that's looking to get more information on loans, please share this video with them. Give us a big thumbs up. Subscribe to our channel. Remember, we do 4 videos a week. Monday, Wednesday, Friday, Saturday at 6 a.m. We release fresh new videos every single week. By doing this, we've shot over 750 videos, guys, in the last 4 years. We're dedicated to our craft, our career. We do this religiously day in and day out to help and serve you, to educate you, to empower you, so you have all the information, so you can get the best funding out there in America. So thank you so much for watching Angelo Christian. I really appreciate you guys checking out the channel. Thank you. Take care. Peace out. Check out my next video, and thank you.